Hello everyone, it's Hamdi Koçak from Marketsall research team. Today is 5th of December, Tuesday, and I will talk about macroeconomic events and data from US and European sites. Firstly, I couldn't do this program at last week, so I will talk a little about last week's data. I will make a little summary for the last week, and then we will talk about this week's macroeconomic events. So let's start. At first, as we all know, that the Wednesday was the one of the most important days for the US economy because the GDP data was released, and we saw there was a huge rise in US GDP. The expectation was to rise to 4.9%, but it came above expectations and is released as 5.2%. So it was really important and positive for the US economy because there is a cautious for a possible recession in 2024. Then we on Thursday the PCE data was released. PCE is the inflation data for the Fed. Fed uses the PCE data for controlling the inflation. So the core PCE data came as expected for both monthly and yearly basis. On monthly basis, the data came 0.2%, and on yearly basis, the data came 3.5%. And then on Friday, there were PMI data, and then the Powell speech was the most important topic for the Friday. From Powell's speech, Powell talked actually more positively than markets' expectations. There were important notes from his speech. He said it would be premature to conclude with confidence that we achieved a sufficiently restrictive stance or to speculate on when policy might ease. It was one of the important notes. And then he didn't give a clear signal about interest rate cuts, but from his speech, the market thought and expects there will not a rate hike again, and the 5.5% on interest rates are the peak level for the US economy. He said also, however, the remarks gave some credence to the idea that the Fed at least is done hiking, as a string of rate hikes since March 2022 have cut into economic activity. Powell noted that inflation is moving in the right direction, so it was also one of the important sentences from him. The last text was from CNBC's report. After Powell's speech considered positively, gold jumped to all-time high level at 2,145 level with the Asia's market opening. The latest leg of gold's rally has been turbocharged by comments on Friday from Fed Chair Jerome Powell that traders interpreted as setting the stage for a pivot toward rate cuts, spurring a plunge in the dollar and treasury yields. So that's all for the last week, and for this week we will also have some important data from both US and Eurozone. Actually, the labor market data is the most important topic. Jobs on Tuesday, ADP on Wednesday, and non-farm payroll, unemployment rate, and average hourly earnings on Friday are the most important data. Also, PMI data will be released on Tuesday, so today. US indices closed last week with a little raise, but they started this week negatively. On Monday, we saw a big selling pressure, but then the indices closed the day slightly lower than the Friday's closing. After the signals for deterioration of the US economy, last week's GDP data considered well as well. I said. Some of the big corporates like JP Morgan said the GDP may have to delay but will not avoid the recession. So there is still a negative perspective of some important corporates. Their economists wrote US might avoid recession in early September. And there's a Yahoo Finance article which says economists predict US inflation will keep cooling and the economy can avoid a recession. It cites a survey that executed the 38 economists from different organizations by the National Association for Business Economics. and we see that 24% of the economies see a recession in 2024. And also, we can see the CME's Fed target rate probabilities. So on next Wednesday, there will be the FOMC meeting, and the market expects a hold at 5.5% for interest rates. And then we can see the market expects a little rate cut from Fed after the March meeting. Markets are pricing for now to 52% interest rate cut in March 2024. So there's a still expectation for recession and also a rate cut from Fed to avoid the recession. And also we saw the multivariate core trend of PC inflation from New York Fed. It's the inflation data that they use to predict or use for pre-inflation data. And we see that it fell below the last 3 years low levels. It's now 2.6 level, the multivariate core trend data. So it's also a positive signal for war against inflation for United States. And also we will see some important data, some PMI data from Eurozone, from France and Germany, and then Australian GDP will release on Wednesday. Also, the Canadian interest rate decision will be released, and the expectation is 5%, a hold on 5% interest rates. So these are the important data for this week. We will do this program for every day at this week, and I will try to talk about the macroeconomic events daily after today. And so also there will be the Japanese GDP data on Friday. That's the one of the most important data for Asian side. And so that's all for today. See you tomorrow.